Well, for the time being, we're putting the spotlight on the real estate space. There's been some concern in various pockets of the market about whether there's going to be any sort of a dip in perhaps demand for, ultra luxury housing, considering the 5-month-old stock market correction. Well, the next company on our radar is actually from the realty space. We've got Pavitra Shankar, Managing Director at Brigade Enterprises, joining in. Brigade, of course, has been launching lots of premium projects in Bengaluru, in Chennai. So let's get some perspective going. Pavitra, great to have you with us on the show. Thanks for joining in. And I really want to start with that question, just address it head on. First of all, tell us that, what percentage of your revenue classifies as ultra luxury? I mean, I don't know, different developers sort of bucket it differently. For some, it's above 10 CR. For some, it could be above 5 CR. So what is that segment for Brigade? And are you seeing any sort of a slowdown in inquiries, in action in that segment?
Hi, good morning. Thanks for having me. So for Brigade, our portfolio is sort of diversified across mid-segment and upper mid-segment. And definitely now that we're seeing the preference for more premium housing, we have launched a few projects on that account as well. So as far as we are concerned, predominantly 80% of our portfolio is mid and upper mid-segment. And what we deem as premium housing is, I would say, 5 CR plus. So we have one project live in each of our major cities, Brigade Insignia in Bangalore, Brigade Icon in Chennai on Mount Road, and Brigade Gateway Hyderabad in Hyderabad. And all three of them are basically, inventory is above 5 crores. In Bangalore, it's a little bit lower, about 4 crores plus. Chennai goes as far as 7 to 22 crores, and Hyderabad is 5 to 15 crores a unit. And each market has been a little bit different. So Bangalore's been pretty stable. Definitely at launch, things are more active at the time of launch and then they stabilize. We don't intend to sell out, inventory at the time of launch itself. So we are happy with the pace of sales in Bangalore. In Chennai as well, at the launch time, we sold more than 25% of the inventory, and it is stable. Although I would say Chennai is slightly slower paced than Bangalore when it comes to very premium inventory. And in Icon specifically, it's, much higher than what the Bangalore price ticket size is. And finally, in Hyderabad, we sold more than 200 units at 5 crores to 15 crores, all within the span of a couple of weeks. So Hyderabad is a completely different market entirely. So I would say different markets in Bangalore are different, in the country are different, whether you're looking at 3 southern markets or elsewhere, Mumbai, NCR. I also think it's also, it's also what are the expectations? When it is premium, we don't need to sell right away. We do need to see, stable interest in inquiries, walk-ins, people inquiring about the project, and then the eventual conversion.
But has there been, Pavitra, that's what I'm trying to, what I'm trying to understand from what you say is that Chennai has been, well, not sluggish, but slightly quiet. Hyderabad, things are flying off the shelves. Bangalore seems to be stable. But has there been some sort of a dip in the level of inquiries or footfalls when you launch these projects vis-a-vis, say, 6 months to a year back?
We didn't really have the very premium projects about a year ago. I would say the market was much more frenzied a year ago because the pricing was still, in the movement of going up and up. I think prices have stabilized across the board, whether you're talking about mid-segment or upper mid-segment or even premium. A lot of that has to do with the price discovery itself by developers. I think all of us know and have the right idea in mind when it comes to pricing at launch. I'd say in the last couple of years, for all of us, it was more of a discovery. Okay, let's launch it at this rate, but very quickly you could take up the rate. Now I think we understand where the market has stabilized, and these are very good numbers. The market has already increased 100 to sometimes 150% in some parts of Bangalore, for example. So we don't expect the rates to increase like that, and therefore I think even the urgency from customers to, take the decision on day one, that level of urgency isn't there. And many of them, seeing the ticket size, they do take their time. This is not the ticket size where someone just comes in on a whim and does the purchase. So they do want to understand, they do want to compare what are the other projects available to them. And I think it's still a careful decision-making, which it should be. And because all three of these markets are fairly stable when it comes to, inventory movement and all of that. So it's not speculative in any of these 3 markets.
Thanks, Pavitra. You had targeted about 63 to 6,500 crores worth sales in FY 24-25. With these launches that have come by, Have you made any early projections for FY26 in terms of launches, collections, and sales?
Do you mean FY25 or?
FY26.
FY26. So in the coming year, we will look to increase whatever we've done in this year. I mean, we are fortunate to have received some approvals in the month of March itself. So we are looking to finish out the current year, FY25, on a strong note. And we're yet to see where those numbers will come up. But that said, all of our launches in the pipeline for FY26 are still looking good. Approvals seem to be stabilizing, but taking more time than we generally expect. In the coming year, we will have more launches in Hyderabad and Chennai. Those are our new markets of focus, and of course in Bangalore. So we don't really give guidance, but we're hoping to continue to increasing our numbers at the 15% to 20%, depending on the year over year in terms of value.
Pavitra, hi, good morning. Prashant here. So just to take that point forward, I think the planned supply since the start of financial year FY25 was about 12.6 million square feet. How much have you launched so far out of this?
We have, while at the end of the Q3 we had released some numbers, but since then we've added another 4 million square feet of launch. So thus far it's almost touching 11 million. So while we had indicated launching about 12.5 in residential, we've touched 11 million, and I'm quite happy with that. Hoping to maybe get a couple more before the year ends. But, the idea is that we'll be selling this over the course of the next couple of years. So while the timing is always, trying to get it within certain quarters, what is happening on ground is still pretty stable. So it's really a question of whether it comes into Q4 or goes into Q1 next year.
Would I be correct in saying, Pavitra, that, of course, nobody wants approvals to be delayed, but the point is delayed approvals were a problem about a year back. I mean, when things were flying off the shelf, right? I mean, very fast. But maybe not so much of a problem. Maybe things will pick up. As you said, you already have some approvals in the month of March. So is that a fair way to look at things? And could you share the planned launch pipeline for 26, or is that too early?
Yeah, it's a little early for what we would want to do in FY26. I think we still need some clarity on where this year is going to end out before I can give any kind of indication how next year is going to look, because it is a percentage increase over what we're able to do this financial year. But what I'm trying to say is that things on ground are healthy. I know there are, more comments being made in terms of how is the real estate market doing, but I still feel it's very healthy. And sometimes it is skewed by what we saw over the last couple of years, which was, every single factor that could go well was going well. And the only thing that was being a challenge was just getting the launch out on time. But what's happening on ground is still that you're still getting many walk-ins coming into site. There's a lot of excitement when a project launches. There's much more understanding in terms of what price we should launch at. So in general, I think it's a very stable and still a very good time for developers, and also a good time for people to buy, because we continue to see prices increasing at a normal rate of say 8 to 10%, as opposed to what it was 30% year over year. So I still think it's a good time for people to buy.
So it's a stable market, and that's perhaps good for customers, and then therefore good for realtors as well. Very quickly, Pavitra, I want to ask you about the other big headline from last week for the sector. I mean, a giant like Blackstone taking such interest in the residential market, right? They've always been huge in commercial, but with this buyout of Kolte Patil, what thoughts in terms of valuation for real estate companies now and for Brigade's own plans? I mean, given this kind of large institutional interest, are you, would you be thinking of raising any further equity capital in the near future?
So we actually did a QIP in August of last year, and we've raised enough funds, and we also have enough funds being generated by our internal accruals itself to fund our land acquisition and business development. So we are quite happy with our equity position today. In terms of other real estate companies, I think everyone's just doing what they need to do in order to be ready to do more land acquisition business development. Someone like Blackstone entering the space, I think, is great. It just adds more formalization to the entire sector. Good luck to them, and good luck to the residential sector. The more quality players, the better.
All right. Pavitra, we'll leave it there. Thank you very much for joining us. Good speaking with you, and look forward to our next one.